If you shop for a stock the way you shop for a TV, you're probably not going to do very well in the stock market. And I'll explain what that means and how to overcome this very common mistake in trading and investing. Then we're going to take a look at the markets. I told you that the markets were likely to rally a few weeks ago, and we've had that. I'm going to tell you what's likely to happen next. And then finally, we're going to look at the trade of the week on CCCC, the entry, the exit on this very hot stock from this past week. That's all coming up in this week's Stockscores Market Minutes. So a lot of people will approach the buying of stocks the way they approach buying stuff. You want to buy a TV, it's Black Friday. You go out and you find the best deal. Well, in the stock market, that's a bad idea because the price action of a stock reflects what people think about the company. If a stock is going down, it's because the company is not doing well, or at least the market's perception is not positive. It's like buying a product that gets a 1-star review on Google. You don't want to buy a lousy product. And if it's got a downward sloping chart, if the stock's in a downward trend, it's because there's something wrong. And so you can't say, well, this stock used to be $100, now it's $10, it must be a great deal. Because the reality is, the reason it went from $100 down to $10 is because there's something wrong. Now, I'm not trying to say we shouldn't try to buy good companies when they're cheap. There's a strategy for that. But when we're looking for stocks to buy, we want to buy stocks where they are likely to go up in the future. And the way that we tell is if the stock is building rising bottoms on the chart, not if it has falling tops. Now, we like stocks that are going up. That's how we make money. We do not like stocks that are going down. So the first thing you should do when you are thinking about buying a stock is look at the chart. Who's winning? Is the stock going up? Is it going down? The best situations are stocks that have been going down and now are starting to go up. They switch from falling tops on the chart to rising bottoms. Let's take a look at a couple of examples. This is a chart of Pfizer, which a couple of years ago was one of the hottest stocks in the market. It was going up steadily as they were selling lots of COVID vaccines. Well, that business hasn't been very good of late, and they don't have one of these weight loss drugs that are so hot right now. And so you can see that this stock has been going down month after month after month. If I just highlight here falling tops, that's your signal to not consider buying this stock. Notice that there is no point on this chart where there are rising bottoms. And by a rising bottom, I mean this, right? It's all falling tops. So you've probably heard that saying, the trend is your friend. Well, in this case, the trend is down, and you do not want to be buying into a situation like that. Now, one of the things that I created to help see whether a stock is in the control of the buyers or the sellers is the stock score indicator. It's the green line on the chart down here. And if that green line is below 60, it means the buyers are not that interested in the company. Now back here, you can't tell the previous time, but that's when the stock was going up. This is actually the top. And the stock scores were above 60 then, and then they fell below 60 in early January of 2023. And it's been one of the worst performing large cap stocks of the year. You don't have to be a financial analyst. You don't have to be a wizard to know that this is a stock to avoid. Just use this simple concept. Are there rising bottoms on the chart, or are there falling tops? Here's an example of one of the better stocks of 2023. This is Costco. And you can see that it started to build rising bottoms early in the year. And the ideal time to buy is when stocks make their first breakthrough resistance from the first cycle of rising bottoms. And so here you have a line of resistance, and you broke out through that after building some rising bottoms. Now, anyone that knows a little bit about chart analysis will know that I just drew a pattern called an ascending triangle. Ascending triangles are signs of optimism because there's rising bottoms. There's a line of resistance, the top of the triangle, and then there's a breakout. There's another one over here. There's a line of resistance, there's rising bottoms, and there's a breakout. That's the time to buy breakouts. Now, one other important thing is although I'm saying you want to buy stocks that are strong, I don't mean you want to chase stocks that go parabolic. If I draw a line across these bottoms here, and I can see that price is there, see how far price is above the trend line? That's a parabolic trend. We want to buy stocks when they just start to show strength, not when they go parabolic and run away from the trend line. So it's a fine line. There's a lot of nuance here. On one hand, I'm saying buy stocks that are strong, but I don't want anyone to think that that means chasing strength. You want to buy when they first start to be strong, when they break from a pattern with rising bottoms. Now I'll look at another example at the end of the video where we'll apply this to a hot stock from this past week that made considerable gains, and it all started in the same sort of way. But first, let's take a look at the markets. A few weeks ago, I said that the markets were likely to go up and that it was a good time to be thinking about buying, particularly the Russell stocks, the small cap stocks in the US, because interest rates were likely to fall. And that meant that those stocks were likely to rise. We'll show you that chart in a minute. But here's the chart of the S&P 500 on a weekly time frame. And you can see that there have been rising bottoms on this market for a while, although depending on the time frame, there was also a period where there were falling tops. So for the shorter term trader, the period from sort of the start of August until the start of, late October, early November, was a time to avoid stocks. But if you're a longer term investor trading off of the weekly, then you've been long in the market since here, because that's when the market first broke through resistance from a rising bottom. Well, now what's happening? What's going to happen next? We've had this really good, call it a Santa Claus rally over the last 6 weeks. And price has risen to resistance. We had a great week this week as the US Fed said they were probably going to lower rates in 2024. And so we have this nice pop in the market. I would caution people from buying right now because we have rallied into resistance. And it's one of the most reliable things that I know about chart analysis. When stocks rally into major resistance or when markets rally into major resistance, they usually get stuck there. And so we may have a little bit more strength next week because there's still a little bit of upside until you hit the absolute highs around 480. But we're getting to the point where it's likely that we'll get some profit taking. We've had this good run up. It would be reasonable to have a little pullback. So my short-term rating then is bullish in the short term because the trend is up. But the longer term, I've put a neutral rating because I'm a little cautious about that rally into resistance. Well, let's take a look at the Nasdaq. QQQ is the symbol. And you can see that it too has done well over the last 6 to 8 weeks. But it too is hitting its head on that resistance level from late 2021. Had a great recovery. We had a terrible 2022. We built a rising bottom. We broke the downward trend line from a rising bottom. And then we did it again here, broke up from a rising bottom, rallied, pulled back, rallied. Next move, I think, is a pullback. Let's take a look at those small cap stocks. It was a few weeks ago in this weekly video that I said that the small cap stocks were likely to rally because the bond market was likely to start to rise, bringing down interest rates and therefore helping these small cap stocks, which have really lagged the large cap stocks. And the small caps had a great week this week, but that started late in October when the downward trend line was broken. It built a little rising bottom. On the daily chart, it was a little more obvious. And we've had this great rally. Well, that's great, but look what we're hitting here. We're going to hit this price ceiling. And so often when you rally into resistance, you get stuck. I'm not saying it's the end of the strength for the longer term. I just think in the short term, we're likely to see a pullback. So the momentum is up. but watch for signs of weakness. Now, what I like to do is watch the shorter term chart. So we could go to say a 1 month chart, 60-minute, and I can see here that we've got rising bottoms. That's why I say this is an optimistic market. I can draw a trend line across those rising bottoms and see that we're quite far above the trend line. Remember at the top of the video, I said you don't want to chase a market that runs away from its trend line. Well, that's what's happened. And so I think we're likely to pull back a little bit. Could just be for a few days before we bounce, but be a little bit careful going into next week. It's going to be a slow week going into the holiday. There's obviously markets are closed around the Christmas holidays for a day or two. And so that's going to have an effect on volume, and you'll probably see the market sort of quiet down and maybe pull back. All right, well, how about the Canadian market? T.XIU is the symbol for the TSX. This is the weekly chart. You can see a nice little rally, again, coming into resistance. Looking at the 1 month chart, you see something similar to the Russell. It's in an upward trend. It's pulled back in the last half a day, day and a half. But still looking good. My main concern, though, is just hitting its head on resistance here. So expect maybe it's only a week or two of sideways trading at resistance. Maybe it's a full reversal. We'll judge that as it comes, and that's a good reason to be subscribed to the channel because I do this analysis every week. It's free, and if you're subscribed and turn on the notifications, you'll get an instant update when I've uploaded a new video. All right, let's take a look at gold. Gold's been very choppy of late. Here's the weekly chart, generally moving up, but a lot of volatility, and that makes it a little bit frustrating for traders because it means you can get whipsawed out of a position. In other words, you could have been a buyer here and, sell here, okay, if you're nimble, and then buy it back, and now it's pulling back. So this big move here was a little unexpected. It was almost a move you don't want to buy because the reward for risk doesn't make sense. You're buying here, your stop is here, and your resistance is there. You've only got this much upside for this much downside. It's like a 1-to-1 ratio. It's not ideal. Whereas something like this, there's your buy point, there's your stop loss point. Look at the move it made. It made 4 or 5 times its risk before it started to reverse. So again, very choppy market in gold. I would say, if there's an individual gold stock chart that looks good, it might be worth considering, but otherwise be cautious. How about oil? Here's the weekly chart. It's been pretty lousy the last couple of months, falling, but it's now falling into support. And it closed this week above its open. Just as when markets rally into resistance, they usually get stuck. Well, when markets fall into support, they usually bounce. So I think we could see a bounce in the oil market soon. Does that mean go out and buy oil Monday morning or buy oil stocks early? Not yet. What you want to wait for is this downward trend line. So what I brought up here is the 30-day chart. This is a 2-hour chart. You can do an hourly, doesn't matter. And what we want to see is switching from falling tops to building rising bottoms and breaking this downward trend line from a rising bottom. And then maybe you can start to look for opportunities in the oil market, which is getting a little oversold. All right, let's move along to some currencies. Take a look at the US dollar. US dollar had an important breakdown right there this week. Why? Well, when the US Fed says they're going to lower interest rates in 2024, that makes it less desirable to own US debt because the interest paid on that debt is less. And so you see the US dollar have some weakness. Well, that started 2 months ago when the upward trend was broken. It didn't quite get up to resistance, right? It tried, came a little short, so that's now a falling top. And so I think the US dollar likely to move down into this region. It's not considerable downside, but it is still more likely to move lower than higher. If we look at the short-term chart, let's do this on a 1-month, 60-minute. And again, if you're a swing trader, this is the chart you're looking at. You're not looking at that weekly chart. You're looking at the shorter term chart because you want to get a sense of where the patterns are. All right, and we see here the break of the upward trend line. Sorry, I'm trying to draw my chart and it's not working. Try that again. There's this upward trend line. It broke down on the Fed news, and we've been moving lower. I think more likely to see a lower US dollar in the weeks ahead than a higher one. All right, the last thing I want to look at, well, actually, no, let's look at Bitcoin. There's another thing that I put a bullish rating on when it transferred from falling tops to rising bottoms. So it became bullish here and then a confirming signal there. Even if we just go from here to here, it's about a, I don't know, 80% price gain. But do you want to chase it now? No, you want to buy when it breaks. You want to buy here. Any of those 3 points. You're breaking from a rising bottom, what we talked about at the top of the video. But once it's moving up, don't chase the strength. Wait for it now to pull back and bounce off of the trend line. So it's a good hold if you're in Bitcoin, but I would not be a buyer. And I'd be a seller if the short-term upward trend line gets broken from a falling top. So here is the Bitcoin chart. This is the 30-day, 2-hour chart. Could be 1 hour, doesn't matter. And so if we now were to break down through this trend line from this falling top, then we'd have a signal to maybe take some profit on a Bitcoin trade. All right, now last thing we want to look at is the bond market, TLT. And here you can see the nice rally in bonds the last few weeks. That's been supportive for stocks. But it's still in a long-term downward trend. And so it's nice to see this, but now that we're coming into this trading range, some resistance, it would be very likely that maybe another week or two of strength, but ultimately a little pullback. Then what we want to see is, does it build a rising bottom and then ultimately break the longer-term downward trend line? All right, so let's go through my ratings then. US large cap stocks, well, all stocks really, bullish in the short term, neutral in the long term. And even though both charts look great, they're coming into resistance in the long term. And that's where I think we could see a pullback. So if we see the short-term trend lines get broken, then you want to be defensive because it's likely that the market's going to pull back. Gold, neutral on both time frames. Oil, bearish in the short term, neutral in the long term, but good chance it bounces next week. US dollar, bearish on both time frames. Bitcoin, bullish on both time frames, but a little risky. And bonds, and I've changed it from interest rates to bonds. The bonds are bullish in the short term, neutral in the long term, which means interest rates are the inverse of that. So if the bond market is going up, that means interest rates are going down. So if I say the bond market is bullish in the short term, that is means negative outlook for interest rates. In other words, going down, which it's confusing because really that's a positive. If you were trying to borrow money, you'd rather borrow at lower interest rates. All right. So when we say bullish in the bond market, that's good for consumers who need to borrow money. All right. Let's now take a look at the trade of the week. And this was the hottest stock of the week, C4 Therapeutics. And I want to walk you through a little bit of the thinking about how I approach a stock like this. So this was a stock that we monitored all week in my Stockscores active live service, which is a live webinar that runs all day where you can watch my indicators, look for abnormality in the market. I make commentary, that sort of thing. This was the day it came alive. And so it's very simple. When you have a stock that's boring, nobody cares about it, and it comes alive with abnormal volume and abnormal price action, then something to consider. Now, I don't like buying price gaps. I like to see a second signal if there's a price gap. So the stock closed on the 11th of December there and opened on the 12th up quite a lot. I think that's a move from about $1.20 to almost $2 overnight. But don't buy the gap. Wait for it to break. And that's what happened right there. That was your first opportunity to buy this stock. And then you had another move. Here's your resistance, breakthrough resistance from a rising bottom. But do you want to be a buyer up here? No, because it's running away from its trend line. Wait for it to pull back and then break the pullback. All right? Don't buy up here. Wait for the pullback and buy the break of the pullback. Now, when do you sell? Well, when the trend starts to go parabolic. So if we draw a trend line across these lows, when you're way above the trend line and then you start to break down, you want to think about being a seller. Now, the way I approach this, very simple concept. If the stock is parabolic, I'm not talking about a little bit of strength like back here. I'm talking about this crazy strength, huge volume. The stock was trading, was I think the most actively traded stock last week. When it's trading huge volume and runs away from its trend line, I like to use the low of the tall candles as support. So if, let's say the buy point, there was lots of buy points in this stock. Let's say you bought here and it kind of goes parabolic there. Okay, say if it closes below the low of this candle, I'm going to be a seller. Well, it almost did that right there, but didn't. And then here's your next tall candle. And then there's the next one. So put your stop at the bottom of this tall candle, and then the bottom of this tall candle, and then the bottom of this tall candle, and you get exited right there. When the stock is parabolic, it's gone up considerably from the original entry point. That's your best exit. Is this stock over? Could it still be a stock to trade? I wouldn't touch it yet, but that could change in a day. And the reason I wouldn't touch it yet is coming back to what we talked about at the top of the video. Who's in control? Well, in the last couple of trading sessions, we've switched from rising bottoms to falling tops. And we have support with falling tops. If we break down through that, this stock is likely to go lower. So until it can start to build some rising bottoms again, I want you to stay clear of this stock. All right. Well, hope that's been helpful. Want to wish everyone the best wishes for the holidays. I'll be still doing my videos. Make sure you're subscribed. And we'll see you next week. Trade well.